The U.S. economy appears ready for takeoff, with vaccinations rolling out and activity increasing all across the country. In fact, Fed Governor Christopher Waller stated that he thinks the economy is ready to rip. Expectations are for the U.S. economy to grow by 6.5% this year and the unemployment rate to drop to about 5% by year end. But on the week, most of the major indices were up only slightly, despite lots of intra-week mouth flapping. The Nasdaq and the S&P 500 were some of the week's winners, while small caps lagged. But the Dow Transports equaled its all-time record of being up for the 11th straight week. Since 1900, the Dow Transports have only once before seen an 11-week winning streak, and that was in February of 1989. So how do the charts look today? Well, let's take a look. And today we're going to look at only one chart, which is the 1-year daily on the spiders, the SPY, and the close on Friday was 417.26. Now, I've pre-drawn the channel lines here, the upper and lower channel lines, to give you a better context of where we are right now. And looking at the bottom trend line, we really only went below that in a downdraft. At this point here, that was the most significant. These others are just minor moves down below. Now, on the upside, we have this point there and this point there, which are significant uptrends up and out of the trend line and then back down in. Each of them led to a sizable correction. So right now, we're just popping above the trend line, at least by the way that I draw it, but we're not elevated high enough to be of too much concern, but we are heating up, and I think we will get there. But we do have a bit of time. But just remember, once we get up here, they can turn on a dime and head down. That's what happens to melt up uptrends. Moving here into the volume, looks fine, and then into the MAC. Now, we're well above that 5, but we got up there here once, twice, and 3 other times. These two here in June and then in September led to pretty sizable downtrends. This here in December did not. Now, we are gaining elevation to the point that we need to start being cautious. Into the histogram, we can see that perhaps we are rolling over a bit, but I think we're still okay. I'd like to see more deterioration in the histogram before I would say that we're heading into a correction. Now down into the price rate of change. Once again, we're above that 25 level, so we've got pretty good elevation here. This point there led to a pretty sizable downdraft, but this did not. So I'd like to see this get a little bit higher before I'm going to be too concerned. Into the RSI, everything's looking good. Now, this is pretty important. We're above that 80 level into the overbought territory. And again, this point there and this point here led to sizable downtrends. So we're getting very close to a point that we really need to be cautious. Right now is not the time to be chasing this market. Don't be trying to buy new stocks. Just keep your cash and keep saving some for the inevitable correction or pullback that will happen. Moving down into stochastics, that looks pretty good, and so does Williams. Back on up here to the price chart. One last look, and as you can see, we're just waiting to see how far we pop up above that upper trend line. And at least for me, that is going to be one major sign of a melt up that could lead to a correction. I'm not looking for a crash. I'm just looking for a correction, maybe on the size of these corrections here, perhaps this correction there. Again, such as here, you don't really need to pop up above that trend line too far before stock market gravity can take hold. So just be cautious. And for today, that's ChewDog Charts. Thank you.